In this video, we are going to talk about the 10K. The 10K is really going to be our guide throughout this course in terms of finding financial information, explaining how accounting works in the real world. We're going to be using the 10Ks of various companies that you probably know of or have heard of, and we're going to use that to really help connect the dots. So truly the best way to begin getting a good grasp of how financial reports are organized is to simply look through a whole bunch of 10Ks. And that's what we're going to do first. 10Ks follow a required structure. In fact, there are 15 items that the SEC requires the companies include in their 10K. The first 4 items are part of part 1, so to speak, and that's general information about the business. The business section here is probably the most important. We call it sort of the red meat. Part 2 identifies or is the place where companies have to, is the section of the 10K where companies have to file their management discussion and analysis, as well as their financial statements and all their footnotes, which they call supplementary data. As well as right before that, preceding both of those, there's some selected financial data, which also often comes in handy in terms of doing financial analysis. Some of the other things could also be important in some contexts, but we've highlighted the 3 items in sort of the section 2, which represent the red meat. And I would say really section 2 of a company's 10K is the meatiest part. This is, you're going to spend most of your time as an analyst looking through item 6, item 7, and item 8 of a company's 10K. And last but not least, there are 2 other parts, parts 3 and part 4, which include disclosures about executive compensation, audit results, and things of that nature, which again could be important, but it's certainly not where you spend most of your time. We spend most of our time just understanding the business by reading part 1, and then we dive right into the financials, which are captured in these three items, 6, 7, and 8. So let's turn to a company that I suspect you're familiar with, and that's Apple. And let's look at Apple's 10K. So this is Apple's 10K for 2013. Notice they are not on a calendar fiscal year end. They are on a off-calendar fiscal year end for the period ending September 28th. And so this was filed with Edgar, which is that SEC database, the name of the SEC database. We went straight to the sec.gov website to get this. This is what the official cover of a 10K almost always looks like. It's sort of this font. It says Form 10K on top, the company name. The basic share count, the shares outstanding for the company as of the filing, is always listed right at the bottom of that first page of the 10K. You see that Apple's got 899 million shares of common stock outstanding as of really the filing date. And if you scroll down to the meat of the course, the meat of the 10K, the very first thing that you see is the table of contents. Not all 10Ks actually have a table of contents to make it easy to see where things are. Some of them just dive right into it. But Apple, very conveniently for us, itemized these 15 sections. Part 1, remember we talked about the business being the red meat of the first part. Part 2, we're going to spend a lot of time looking at section 6, as well as the financial statements themselves and the footnotes, as well as the management discussion and analysis section. And then the last 2 parts, part 3 and part 4, we don't really spend a lot of time talking about, even though if you're worried that a company maybe had some red flags during an audit, this is where you would go, part 3, to make sure that there are no red flags or anything like that. So let's briefly look at the business section. So let's go to page 1 of the document and see what the business section looks like. It gives you a company background. It tells you what Apple does. It sells iPads, iPhones, etc. It identifies in item 1 their business strategy. If you scroll down, we're going to spend in the context of our course really diving into these disclosures. But for right now, I just want you to get a lay of the land, so to speak. And you'll see that they identify descriptions of each one of their products, their business. They talk about iTunes, their platforms. So this is really just a good overview of the business. They talk about markets and distribution. They talk about how, for example, the net sales through their direct distribution channels represented 30% of their net sales, and this is through the Apple Store and things of that nature, as well as indirect distribution. This is through resellers and that nature, 70%. So they're giving you high-level descriptions of what their business is all about. They talk about competition, and they tell you about how their relationships with their suppliers work. When you're getting to know a company, this section is of critical importance, and that's why we've highlighted it as part of the red meat. Okay. And now let's move on to the management discussion and analysis section. So you see there's about 10 pages here of real good red meat. I'm going to scroll down to the next portion that I think is important. And so once we've gone through the red meat, we're on page, I think it was about even closer to 15 pages. Then they get into things that I think are probably less critical, but certainly important. Where are their properties located? You know, they're based in Cupertino and all that good stuff. But let's scroll down to their selected financial data, item 6. Item 6, this is before the full financial statements and before the management discussion and analysis section. This is what they think represents the most important financial highlights. And you see, they sort of aggregate. This is what our revenues were. This is what our profits were, net income. This is what our total debt was. This is how many assets we had. These are not complete financial statements. This is selected financial data to give you a quick, high-level sense of what's going on with the company. And then we turn to item 7. Item 7 is management discussion and analysis. We often just term it MD&A, where they really go through what happened during the year, and they even identify expectations, really in a detailed financial standpoint, what happened during the year, what their expectations are, and they even give you segment level data. So this is required reading when you want to analyze a company. It looks like there's about 10 or so pages of management discussion and analysis discussion where they talk about various items. And I'm going to scroll down all the way to get to the financial statements. Then that's the next big section. So we skip 7A. That's usually not that important. They talk about interest rate risk and things like that. It could certainly be important for some companies, but generally speaking, we dive straight to item 8. And item 8 is where the financial statements are. This is truly where we spend most of our time in this course. Income statement. The next financial statement is the consolidated statement of comprehensive income. It's a statement that's not used that frequently, but we'll certainly mention it. We talk about the income statement a lot, and then we talk about the balance sheet quite a lot. This is their balance sheet. And then if you scroll down, statement of shareholders' equity. Again, not a statement that we spend too much time talking about, but we're certainly going to mention it. Last but not least, the third of the core financial statements is the statement of cash flows, or the cash flow statement. And we're going to spend really the majority of the course focusing on the income statement, the balance sheet, and the cash flow statement, which represent the 3 financial statements that analysts spend most of their time in. And once you finish up with the financial statements, we turn to the financial footnotes. And the financial footnotes can be a short disclosures, long disclosures, but it is another critical piece of the puzzle. It's the final bit of red meat in a 10K. In the next video, we turn to the income statement.